How to invest $1,000 in 2025, even if you're a beginner. It was just after New Year's when Daniel finally did it. For months, he'd been scraping together small savings, skipping Uber Eats, saying no to nights out, selling old clothes online, and now there it was, $1,000. Clean, earned, his. At first, he celebrated new shoes, a few dinners out, maybe a gaming upgrade. 12 days later, nothing remained. No savings, no investment, not even a good memory. That night, Daniel sat alone and made a promise. If I ever get another $1,000, I won't waste it. I'll build something with it. The second time around, he did exactly that. And today, we're walking through the 5 powerful steps he used. Plus one bonus strategy to turn that next $1,000 into the start of financial freedom. Stick around till the end. The last tip is the single biggest reason Daniel's money keeps growing, even while he sleeps. Let's begin with what he didn't do. Daniel didn't rush to TikTok for stock tips. He didn't gamble it all on a meme coin. He took a breath, learned from his past, and made a plan. A plan that started simple, but turned out powerful. Each step he took built not just his bank account, but his confidence. And that made all the difference. Hey there, welcome to Vault Visionary, where smart money meets everyday strategy. If you're new here, we break down real-world finance using real stories, smart tools, and zero jargon. Today's focus, what to do with your first $1,000 in 2025. Even if you're a beginner, no crypto hype, no stock picking stress, just 5 solid steps to grow wealth, the way Daniel did, plus one move that makes everything automatic. Let's jump in. And if you're watching this with your own $1,000 in hand, pause for a second. You're already ahead. Most people never even save this much. Now, let's make it count. Step 1. Build a safety net. What if everything goes wrong? Before thinking about investing, Daniel asked himself a hard question. What if I lose my job? What if I get sick for a week? What if my car dies? That's when he learned rule number 1 of wealth. Never invest money you can't afford to lose. So instead of dumping the full $1,000 into stocks or crypto, Daniel pulled out $200 and parked it in a high-yield savings account. That account gave him 5% interest. And more importantly, peace of mind. He called it his Sleep Well Fund. Quick tip, look into Aussie banks like Up, Macquarie, or ING. Many offer interest rates above 4.75% as of 2025. This fund saved him later when a surprise dentist bill hit. And it wasn't just a one-time save. That emergency fund became a mental cushion. Every time life threw something unexpected his way, Daniel didn't panic. He had a buffer. That reduced stress. It also meant he never had to sell investments in a hurry. That's a huge advantage. Step 2. Index funds. The quiet millionaire's strategy. Daniel's first instinct was to pick hot stocks until he asked his cousin, who quietly retired at 41. The advice? Bet on the whole market, not just one horse. Enter index funds, low-cost ETFs that mirror the overall stock market. Daniel took $500 and invested it in funds like VAS, top Aussie companies, VTI, US market, VGS, global exposure. He wasn't chasing wild returns. He was planting seeds. Over 10 years, VTI has returned 170% plus. Slow and steady wins long-term wealth. Use apps like Perler, ComSec Pocket, or Stake to buy these easily, even with small amounts. This $500 became the foundation of Daniel's future wealth. Step 3. Fractional shares. Owning giants on a budget. Daniel always thought he needed thousands to invest in brands like Apple, Tesla, or Amazon. But in 2025, that's not true. Thanks to fractional shares, he bought a slice of Apple for $50 and another $50 in Tesla, using platforms like Sharesys, Revolut, or eToro. This allowed him to start small, learn how real companies move, build confidence. When those shares rose 12% in a few weeks, he felt the thrill. Not because of profit, but because he was finally in the game. Fractional investing is ideal for beginners testing the waters with tiny amounts. Daniel also learned how to track earnings reports, understand PE ratios, and read basic financial news. Little by little, he became more fluent in the language of money, and that confidence opened doors he never expected. Step 4. Invest in yourself. Next, Daniel did something most people skip. He spent $100 on a personal finance course. Not flashy, not passive, but powerful. The course covered budgeting, scams, investing basics, and emotional money triggers. A week later, Daniel got a shady crypto message. Double your money in 72 hours. Because of the course, he recognized it as a scam and dodged a bullet. He later read The Psychology of Money and began following channels like Graham Stephan and Our Rich Journey. That $100 in education saved him thousands and sharpened his long-term mindset. Books, courses, mentors, they pay dividends for life. Daniel even started sharing what he learned with friends. That made the knowledge stick. It also gave him a reputation as the money guy in his group, which, ironically, led to even more opportunities. Step 5. Alternative assets. The curious $100. Daniel still had $100 left. Instead of saving it, he got curious. $50 into Ethereum to learn about blockchain and crypto, $25 into a REIT, a real estate fund that paid dividends, $25 into a gold ETF for stability if markets crashed. These were tiny bets, not meant to get rich, but to test and learn. And they did just that. Watching these helped Daniel better understand volatility, risk, and how to stay calm. Apps like Saxo, Spaceship, or BetaShares offer easy access to these kinds of assets. And more importantly, they built a habit of exploration. Daniel didn't become an expert overnight, but he became financially curious. That trait alone made him smarter with every dollar he earned moving forward. Bonus move. Automation. The snowball that never stops. But Daniel's smartest move wasn't a stock or a savings account. It was automation. After that first $1,000, he set up auto transfers of $100 per month into the same index fund and savings account. No decision fatigue, no maybe next week. It just ran in the background, growing like a snowball. Tools like Raise, Perler Auto Invest, or even direct debit through your bank make this seamless. Months later, Daniel barely noticed the missing money. But the results? They spoke volumes. It was no longer about budgeting willpower. It was about rhythm. The same way you pay your bills or rent, he was paying his future first, and that made all the difference. So, what happened to Daniel? That $1,000? It wasn't just money, it was a mindset shift. Here's what it unlocked. His emergency fund covered real-life curveballs. His index funds grew steadily, with zero effort. His fractional shares taught him to invest confidently. His education protected him from scams. His automation built wealth silently. And his curiosity kept him learning. Fast forward 1 year. Daniel's now past $10,000 invested, all by repeating what worked. Not bad for a kid who once blew his whole bonus on sneakers and sushi. Your turn. Comment, "I'm starting with $1,000" below if you're ready to begin your journey. Like this video, subscribe, and hit the bell so you don't miss the next story. Up next, 4 side hustles that make people $500 per week in 2025, and one takes less than 20 minutes a day.